Assalamualaikum and hi everyone. In this video, I will discuss one of the most significant energy sector transaction in Malaysia in 2026. The decision by Saudi Aramco to transfer its 50% stake in PrefChem to Petronas. So, at first glance, many headlines simply stated Aramco exits PrefChem. But this raises an important question. Why would the world's largest oil company walk away from multi-billion dollar investment after only 8 years? Was the project failing? Or was the partnership unsuccessful? Or was this actually a financial rational strategic decision? In this video, I will go beyond the headlines and examine the business structure of PrefChem, the financial mechanics behind refining and petrochemical businesses, PrefChem financial performance since operations began, Aramco portfolio optimization strategy, why Petronas wanted full ownership, and what this means for Malaysia's energy ecosystem. By the end of this analysis, we will see that this transaction was less about failure and more about the strategic capital allocation. So let's begin with the background. PrefChem, or Pengerang Refining and Petrochemical Company, was established in 2018 as a 50-50 joint venture between Petronas and Aramco. The project formed part of the Pengerang Integrated Complex in Johor, and the facility consists of 300,000 barrels per day refinery capacity, 3.4 million tons annual petrochemical production capacity. Its business model is based on vertical integration. Saudi crude oil is supplied to the refinery, and the refinery converts crude into fuels and petrochemical feedstock. These feedstocks are then processed into higher value petrochemical products before being sold to industrial customers. The logic was straightforward. Aramco will provide secure crude oil supply, and Petronas will provide infrastructure, local expertise, logistic capabilities, and market access. Together, they aim to capture value across the entire downstream energy chain. The objective was not merely to sell crude oil, but to generate higher margins by converting crude into premium fuels and chemicals. So, to understand why Aramco exited, we first need to understand refinery economics. Contrary to popular belief, refineries do not make money simply because of oil prices increase. Instead, profitability depends on what is known as the refining margins. Refining margins equal to value of refined products minus cost of crude oil. For example, if crude oil costs $70 per barrel and refined products are sold for $85 per barrel, the refinery earns a margin of $15. However, if product prices fall to $75, while crude remains at $70, the margin shrinks to only $5. That represents a two-thirds reduction in profitability. This is why refinery earnings can be highly volatile. In recent years, the petrochemical industry has faced several challenges, such as global oversupply, slower economic growth, reduced industrial demand, and margin compression. These conditions place significant pressure on capital-intensive facilities such as PrefChem. Although PrefChem does not publicly disclose detailed financial statements, industry conditions allow us to assess its likely performance trajectory. The project's financial journey can be divided into 4 phases. Phase 1, startup challenges from 2019 to 2020. Like many mega projects, PrefChem experienced commissioning costs, operational ramp-up challenges, and lower utilization rates. The COVID-19 severely impacted global fuel demand. Air travel collapsed, industrial activity slowed, refining margins deteriorated significantly. This period was likely characterized by weak profitability and lower returns on invested capital. And then it comes with a phase 2, recovery and peak performance from 2021 to 2022. As economies reopen, demands for fuel surge. The Russian and Ukraine conflict further tightened the global refining capacity and boosted the refining margins. Many refiners around the world reported record earnings during this period. PrefChem likely experienced strongest financial performance since operation began. And phase 3, petrochemical downturn from 2023 to 2025. the global petrochemical industry entered a difficult phase. Massive capacity expansion in China created oversupply. Demand growth slowed, margins weakened significantly. As a result, return from petrochemical operations came under increasing pressure. This does not mean PrefChem was failing. However, it likely meant that returns were becoming less attractive compared with alternative investment opportunities available to Aramco. And that leads us to most important question. From Aramco's perspective, the key metric is return on invested capital or ROIC. ROIC measures how efficiently a company generates profit from capital invested. ROIC equals to net operating profit after tax and then divided by the invested capital. The higher the ROIC, the better the value creation for shareholders. Imagine Aramco has 10 billion available for investment. Option A, they invest in a downstream refinery generating approximately 6% returns. And option B, invest in an upstream oil project generating approximately 50% in returns. Which option will shareholders prefer? The answer is obvious. Most will choose the higher return investment. This is the essence of capital allocation. Management continuously evaluates whether each asset is generating sufficient returns relative to the alternative opportunity. Therefore, Aramco's decision does not necessarily indicate that PrefChem was a poor asset. Rather, it suggests that other opportunities may have offered superior long-term returns and strategic value. Now, let's look at the transaction from Petronas' perspective. Why acquire full ownership? So the answer is operational flexibility. Under a joint venture structure, major decisions require approval from both shareholders. This often leads to slower decision making and more complex governance processes. With full ownership, Petronas gains faster decision making, greater flexibility in crude sourcing, better integration across its value chain, and stronger alignment with Malaysia's national energy priorities. In an increasingly volatile energy market, speed and flexibility are valuable strategic advantages. Petronas can now optimize operation without requiring partner approval. This creates greater agility and operational efficiency. Another way to understand this transaction is through risk management. Aramco's exposure previously included upstream assets, downstream refining assets, international joint ventures, and global regulatory and geopolitical risks. Today's energy market faces increasingly uncertainty. This includes geopolitical conflicts, shipping disruptions, energy transition risks, and demand volatility. As complexity increases, companies often simplify their portfolios. By exiting ownership while maintaining commercial relationships, Aramco can continue supplying crude oil and participating in Malaysia's market without carrying direct ownership risk. And this approach is known as an asset-light strategy. The objective is simple: maintain market access while reducing operational complexity and capital exposure. There is also a government's dimension to this transaction. Energy infrastructure is strategically important to every nation. Refineries support fuel security, industrial competitiveness, economic resilience, and national energy independence. By gaining full ownership, Petronas strengthens Malaysia's control over a critical strategic asset. This aligns with a broader global trend where governments and national energy companies seek greater control over critical infrastructure. Therefore, this transaction is not merely financial, it is also about national resilience and long-term economic security. So why did Aramco exit PrefChem? After examining the business model, industry condition, financial performance trends, and strategic considerations, the evidence points to three primary reasons. First, the capital optimization. Aramco is continuously evaluating where its capital can generate the highest return. In a world where investment opportunities compete for limited resources, management must allocate capital to projects that maximize shareholder value. If alternative upstream or strategic investment offers stronger returns than downstream refining or petrochemical assets, relocating capital becomes a rational financial decision. Second, portfolio simplification. Large multinational energy companies operate across numerous countries, business segments, and regulatory environments. Simplifying the portfolio allows management to focus on core priorities, reduce operational complexity, and improve overall efficiency. Exiting ownership in PrefChem enables Aramco to maintain commercial relationship while reducing direct exposure to downstream operational risks. And thirdly, evolving strategic priorities. Aramco's and Petronas are pursuing different yet complementary objectives. Aramco's focus is increasingly centered on optimizing its global investment portfolio and maintaining flexibility in a rapidly changing energy landscape, while Petronas, on the other hand, seek greater operational control, stronger integration across its domestic value chain, and enhanced alignment with Petronas with Malaysia's long-term energy goals. Importantly, none of these reasons suggest that PrefChem was unsuccessful. In fact, the project fulfilled many of its original objectives. It established a major refining and petrochemical hub in Southeast Asia, strengthened economic cooperation between Malaysia and Saudi Arabia, and contributed to the development of the Pengerang Integrated Complex as a strategic industrial center. What changed was not necessarily the quality of the asset, but strategic priorities of its shareholders. This distinction is critical. In corporate finance, companies do not hold assets indefinitely simply because they are profitable or operationally sound. Instead, they continuously assess whether each asset remains the best use of capital relative to the alternative opportunities. An asset can be successful and still be sold if management believes that capital can create greater value elsewhere. From Petronas' perspective, acquiring full ownership provides greater flexibility, faster decision-making process, and stronger control over strategically important national assets. From Aramco's perspective, exiting ownership frees up capital while preserving commercial ties and market access. In other words, both parties may have achieved outcomes that align with their respective strategic objectives. Ultimately, this transaction highlights an important lesson for business, finance, and energy professionals. Major corporate transactions are not always driven by crisis or failure. Often they are driven by strategic repositioning, changing market conditions, and disciplined capital allocation decisions. The most successful organizations are those that continuously adapt their portfolio to reflect evolving opportunities and risks. Therefore, Aramco's exit from PrefChem should be viewed not as a retreat, but as a strategic reallocation of resources. At the same time, Petronas' acquisition should be viewed not merely as a purchase, but as a move to strengthen national energy capabilities and long-term economic resilience. The key takeaway is simple. Successful companies do not just invest, they continuously evaluate, optimize, and redeploy capital to create sustainable value over the long term. Thank you for watching. I hope this video has provided a different perspective on Aramco's move and help you look beyond the headlines to understand the financial strategic considerations behind the decision.